All right, we're back, folks, for another gripping eGrocery monthly insight sales report with our dear friend David Bishop at Brick Meets Click. David, great to see you. Welcome to late spring, early summer.
Oh, well, it's good to be back as always, Mark. I appreciate the opportunity.
So let's get right into it, and then we'll pepper it with some topical comments. I think the May numbers are going to be a little surprising. There was one anomaly. Well, I don't know. Can we call it an anomaly or part of a longer trend that's being identified? But I'll throw it over to you to just share the news.
Sure. We'll let you time tell. Top line sales in May dropped a little over 3% year over year. If we were to kind of pull back and look at the three segments, pickup, delivery, and ship to home, pickup actually grew over 9%, kind of bucking the downward trend that the other two segments had in May. Delivery, coming off a hot month last in April, is now down almost 12% year over year in the month of May. And ship to home continues to face declining sales during the month of May, falling 17% this year. So, that's kind of the top line. We can kind of decompose and unpack that.
So the resilience of pickup continues. So that trend is not going away. But the drop off in delivery for the month, surprising. Do you have any insight into what might be driving that?
Well, I think when we look at delivery in particular, the first thing we can see is we had a dramatic pullback in the monthly active users, or those who placed at least one order or more for delivery during May. That dropped over 10% in May. So obviously, starting with that, we had fewer households that were turning to delivery in May. That's probably the largest culprit when we look at that, because if we look at something like average order value, that was positive, although it's still under the rate of inflation. So I think that would be the main factor driving the results that we're reporting for the month of May.
Any notion as to whether some of the incentives have been curtailed?
You're talking about in terms of the financial incentives that the third parties are using to attract those. It's difficult to make a generalized statement, just given the ability for them to target very specifically, at least digitally, those offers. Obviously, we still kind of anecdotally as a household receive of those offers. In fact, I just received a meal kit offer in the mail today. So they're still coming. I think the amounts are relatively the same. I think what they're now doing is starting to kind of add bells and whistles to their value proposition beyond simply kind of the new subscriber or new user incentives. I think we saw, for instance, we have the credit card that provides cash back rewards. We have continued incentive and discounts to use the pickup. And now we're seeing some other fringe benefits that maybe you and I don't quite fully appreciate that some of them are offering.
Yeah, it's especially around the scented incentive, which was a little surprising to me, but there may be. I got to trust that their data teams understand that there's a segment that would appeal to.
Absolutely. I mean, part of that is knowing who your customers are, and they may know something that we don't. So time will tell.
So we're still operating in this inflationary environment. And we touched on previous month and hinted at upcoming research that is just about to be released that really focuses on the calculus that customers make when it comes to receiving their grocery orders. And there's a lot of factors that go into that. Are you seeing those factors continue to play out in this month's report?
Yeah, I think, when we dig beneath the surface, some of which we report in the monthly report, others we just do the analysis to kind of keep a pulse on it. is, it's undeniable that, mass in general and Walmart in particular continue to benefit from, the realities that we're all facing today. And that's in part because Walmart is known as the low price leader. Whether that's always the case or not, the perception, or at least the association in the consumer's mindset, is if you want to go somewhere for low prices, you go to Walmart. And when you look at their penetration online, their ordering activity, I think that's kind of reinforcing that notion that they own that price position, literally and figuratively, in the U.S. market.
But when you look at it in the grander scheme, because this has been conducted for it's over 3 years now, correct?
Yeah, I mean, we went to the monthly in March of 2020, so yeah, it's been over 3 years now.
And we're still at an elevated, 3.5x what it was pre-COVID.
Yeah, I think it's.
Are you seeing any erosion, like long-term erosion, in terms of that monthly sales number?
No, I mean, obviously the number 6.9 billion is obviously lower than what maybe we reported last month or in prior months. But what may be becoming a little more visible, at least from what we can see in our tracking, is that we may be now starting to pick up a degree of seasonality, right? I mean, May in the last couple of years have shown a drop off versus April, right? Going into the summer months. I mean, a lot of schools get out in May. So we may be just starting to observe more seasonal trends online that really haven't been as visible for at least the last 3+ years, given, the disruption to, the way we operated and lived our lives. So that would, I think, be one aspect of it. There's no question that, again, we're still operating off an elevated base that shows no signs of going, all the way back to pre-COVID levels. We know that. What we still see is that, the hangover effect of COVID has kept some people online, while other people may have moved back to shopping exclusively in the store as it relates to their level of concern for COVID. We didn't mention it last time, but when we recorded the April recording, which was kind of at the end of the official declaration in the U.S. that the pandemic was over, I caught COVID for the first time, 3 years in, and who would have thunk it would have happened at the official end of COVID. So, and it was quite impactful, and it did cause some pause and reflection in terms of activities that may be avoidable going forward if I don't want to catch it again. So while concern overall is significantly lower and continues to wane, there still are affected groups that are influenced by that concern, and that's keeping them on. And then you have those who have, more mild concerns, and then they start to, diminish further, and then they go back to their preferred method. Now, some people have found that the preferred method now is actually online, although, again, the preponderance of shoppers still shop in the store and do the majority of their shopping on store or in the store.
Are you seeing, at an aggregate level, are you seeing any resilience amongst the regional grocer segment compared to mass? Or are you seeing, is it 2 steps forward, 1 step back?
Yeah, it's a little difficult for us to see it specifically at that cut or slice of the data. Mm-hmm. But what I can say, and it's more anecdotal through my own observations in various markets, is that there are some regional grocers that are actually doing quite well online relative to volume. I mean, I mentioned to you, Mark, when I was doing some field work, in other markets, I was in one retailer where, as I was doing that work, I learned that there were probably 20 personal shoppers actually in the store at that time. And that store in itself, or by itself, had a total team the size of 100 shoppers, working, 24/7 or throughout the week. So, clearly some have a value proposition that's resonating. What's likely happening is the halo from the store moved online. I mean, on selling online doesn't all of a sudden disconnect you from all the associations, good and bad, that people had with you when they shopped in the store. If they loved you in the store, most likely they loved you online, right? So I think we do see pockets of retailers who do extremely well. I mean, it's those who have strong brand equity, who have strong consumer loyalty, and that starts in the store and carries over online.
And I think we have seen, at least in I think the large metro markets, a bit more softening this past month than compared to other regions. Now, do you think that's more a function of the return to in-store and the quantity of options available to consumers?
Well, and it could also be access. I mean, we are now facing in some of the urban areas kind of a retreat, if you will, for retailers, right? We've had highly publicized store closures, even in Chicago, for a variety of reasons. But we got to remember the kind of the second order effect of that is if you close this physical store, then the ability to shop online in proximity to that is going to be affected, especially if you're interested in pickup, right? And let's just keep in mind, pickup in those large metro areas is more popular than delivery. So there could be a degree of access. There could be a degree of lower demand driven by this flight from those urban areas that continues today, just given the cost of living. I'm not suggesting that it all of a sudden occurred in just the month of May, but these would be causal factors we'd have to dig into a little more, but could be some color to explain some of those other considerations to evaluate beyond simply a person's preference for shopping in the store.
Can you comment on what you're seeing as far as repeat intent and the value of shoppers who are buying online more than 3 or 4 times a month?
Yeah. So first of all, the likelihood to use the same service again within the next 30 days had dropped in May versus the prior year by a couple points. Last month, we talked about the red flags that should be concerning for the grocers. Those continue today because what we saw in May, unlike April, where both mass and grocery reported declines in that likelihood to repeat, only grocery reported a decline in that intent in the month of May. Mass actually has set a new high watermark for themselves. Nearly 3/4 of those customers who most recently used the mass pickup or grocery service indicated that they are extremely likely to use that same service within the next 30 days. So that's quite impressive. But what that's now done is led to the largest gap that we've recorded of almost 20 points. That's huge between that intent rate at mass with grocery. And when you look at it, what's concerning is a large part of that delta or gap there, if we were to decompose that by method, is actually sitting in the pickup segment, right? And maybe part of that is because that's where retailers own and control more of that experience.
Right.
And, obviously, one of the things that's going to impact it amongst many is the wait time. And we know that many retailers, for a variety of reasons, one of which may be low volume, struggle to hit the same type of wait time thresholds that, the competitors in mass like Target and Walmart are able to do because they do have the volume that allows them to staff it accordingly and respond and react more quickly. But I think your question about the first time versus the kind of what we call the 4 or more, the repeat is each of those segments, customer segments, is slightly down versus a year ago, but the directional trend, if whether we're looking at this year or last year or 2 years ago, is that the importance of laddering that first timer into the more experienced one, someone who's used it 4 times or more in the last 90 days, is that you go from roughly a 20% chance of repeating in the next 30 days to over 30. to over 80, right? So it's like a 4x improvement. And obviously it's easier said than done. But what is clear is what's the value or the reward for being able to do that is you now have a customer who's in effect giving you their loyalty by not necessarily considering where else to shop online, right? They're going to come to you because why shouldn't they? You haven't given them a reason to consider another retailer. For those retailers who are struggling to convert that first timer, they may have spent a lot of money to acquire them through financial incentives or special deals. If they don't surprise and delight and they just disappoint and they don't deliver against the expectations that people now have, then they don't have any chance of getting that payback. And worse, they're just setting that customer up to be acquired by someone else that does a better job. So part of what grocer and mass are wrestling with is not giving your current customer a reason to go somewhere else. I mean, and that's an age-old dilemma. It's a newer one for online because of the aspects of the shopping experience that affect repeat rates.
Yeah, and it really is it's an outcome of a variety of things. One, do you executing on? Do you have the strategy, and are you executing on that strategy? Focused on the repeat audience. Is the technology that you're deploying in sync to provide that great experience? And do you have the boots on the ground who can help operationalize between your strategy and your technology
and I would
a great experience?
Yeah, and I would add that we're conducting some custom research right now for Mercatus that you're going to be publishing soon. That in one aspect is looking specifically at pickup and asking the question to those people who were not considered promoters. So on that 11-point scale, 0 to 10. These would be people who did not give a 9 or a 10. So for all those others, we're asking, what reason or reasons factored into you giving, the score that you gave. And, it could be ranging from, long wait time to not getting all the items that they ordered to not liking the substitutes that were given, if there was a substitute, to, another range of factors like you mentioned, Mark, that we need to look at. And obviously the next step is really understanding and weighting what's the relative importance of each of those factors in determining when the person decides, okay, I'm done shopping here, right? Is it just one of those? Is it a combination of those? Is it the recurrence of that? I mean, it used to be in out of stocks, if you experience that, out of stock situation 3 times, now you're more likely to consider shopping somewhere else, especially if that out of stock is being encountered with a primary or preferred product that you're looking to buy, right? So we have to kind of go through the same process of, diagnosing what's most important and then ensuring that we frequently or more frequently deliver against those, and prioritizing that, because we can't do everything. We have finite resources, but we need to do an overall better job. And what's clear, if we're looking at grocery and mass right now, is, there's something that's driving a wedge in that intent gap. Now, what is it? Again, it could be out of stocks. It could be poor customer service. It could be higher prices. It could be the fees that are charged. It could be the wait time. It could be all those things or none of those things. It could be something else. So I think this is why, we always encourage retailers, as you know, Mark, that when they see this report, this is really just kind of the start of the conversation. The next round of the conversation really should be, well, how do I compare? And so they should go back to their respective organizations and try to understand these issues based on the inputs that they have available. And then, do the root cause analysis to determine, what may be factoring into this that we aren't managing, closely enough. Exactly. That's what we need to do. But, clearly right now, grocery is still lagging against mass. And massive surge forward. I think a part of that is definitely the inflationary environment. But in other aspects, it's becoming a little more evident that maybe there's operational issues. Now, when I say operational issues, I'm tending to look at the end of the kind of the path to purchase or shopping experience, really with the receiving of the order. Mm-hmm. And it could be I waited too long, or I waited longer than I expected, and that could even include delivery. So
yeah, and to your point about the upcoming research, and we're looking forward to releasing that. In fact, later this month. We get a lot of, well, at least I have. I'm not sure. I'm not sure if you have, but we get a lot of compliments about the monthly research that Mercatus has been happy to help fund for these 3 years, and I think it's become a staple in the annual calendar that a lot of grocery retail executives expect to receive. I think one question that may be in their minds right now is going back to our 5-year CAGR, and not to put you on the spot, David, but I'm going to do it. Are you now? We're what, 5 months into the year, and we all identified that 2023 was going to be a down year in that 5-year forecast. Where do you see are the numbers bearing out as far as you've been tracking so far this year?
Oh, that's a good question, Mark.
Did it, folks? I put them on the spot.
You did. There's some things I just don't look at until I need to look at it. And, looking at what the year-to-date numbers are, maybe one of those, just because part of the attention that we have each month is, okay, let's try to unpack and explain as best we can some of the results that we're seeing and add some additional context or perspective to it. So I don't know the answer to that. Obviously, with a little bit of back envelope math, I can kind of come to that. But some of the underlying assumptions that were driving our forecast, still remain intact. In fact, now there's an increasing probability that the Fed will make another rate increase. Maybe not in June, but in July.
Well, I can tell you, for those who don't know, I'm in Canada, and our federal Bank of Canada just raised interest rates again today, and probably will again in July.
Yeah. So and there's two ways to look at it, right? I mean, if we take the good, what good can be had from that? It's hard to say. But from a competitive standpoint, as those interest rates continue to rise, the cost of capital continues to rise with it, which just puts that much more pressure on those firms who are really in need of outside capital to maintain their growth. Obviously, we've had to pivot from growth at all costs to a focus on profit. At the same time, until those companies go public, they got to be focusing on cash flow, and that will provide a little more rationality to the market. We can see some of that as evident by some of the moves that Amazon has made with their pricing of delivery and the thresholds they require now for free delivery. And we don't need to talk about that, but that would just be one case in point. That is a good signal to the rest of the industry that at least Amazon has made that shift. That reduces certain pressures, not all pressures, because Amazon's not the one that most grocers have to watch out for. They have to really watch out for Walmart. And Walmart's doing things that most grocers can't. I think ultimately, though, the higher interest rates is a negative overall because it puts more pressure on the households because a lot of these households may carry debt in the form of mortgage payments or credit cards, and that's just going to eat into their discretionary spending. The saving grace that grocery generally has is this figurative moat around spending because it's a staple, right?
Staple. Yep.
But within that staple basket, there are discretionary like purchases, and it may come in various forms, and some of that may be in the brand trading from national brand to private label. It could be in the ways that the consumers are trying to conserve their cash. And I think what's really interesting, and I can't say definitively whether this just happened or not, but I saw it yesterday when I was on the Walmart app, and they are now in certain cases, take Gatorade, normally mention brands, but this is the one I saw it on. It was showing a price that was lower than the previous price, and they had an information queue on that, and it wasn't a discount, and it wasn't a rollback, and it wasn't a price promotion.
It wasn't okay.
And the way they telegraphed it, if you clicked on, why do I see two prices? What's this crossed out one mean? It was simply trying to give them a reference point, which was considerably higher than the rollback price. It wasn't a rollback, and highlighting the savings for that individual item. And they did that in a few areas that I observed. In another area, I saw it in carbonated soft drinks with like the 12 packs of soda. So it's interesting to me that Walmart is potentially starting to use some price communication tactics, on the website that are really reinforcing the value of buying from them. And at the same time,
in the moment.
And at the same time, what the app is now saying is that this is the online price.
Yeah.
So what I haven't confirmed yet, I'm not necessarily anticipating this would be the case, but that essentially implies there is a chance, albeit maybe small, that they could be leading with a lower price online than in store. And we haven't seen that in the broadline grocery space yet, although we have seen that in some category killers. And we've talked roughly about that, and we can go there if you want. But I think it's interesting because it is setting up the opportunity if they choose to use it. And again, I don't know if they are in fact doing this because I haven't gone to the store, is offering a stronger price to grab that online, that purchase online.
Yeah.
And then offer the other price in store. I mean, obviously,
which, as you said, is an interesting tactic that, they may be bringing to their predominance in online grocery.
Well, and if they follow the lead of the category killer that I had talked with you offline about, the way they could mitigate frustration with in-store shoppers who actually open the app and say, hey, why is the price one lower online than in store, is they could simply offer a price match within their own four walls relative to in-store and online. That's what the category killer does. So if you were a consumer shopping the store and you came across this anomaly, they could handle it. But at the same time, if you recognize a person shopping in the store may be less likely to open the app, then you may have an opportunity to kind of arbitrage that difference and just, get a little bit more margin out of them. And again, I'm not suggesting that Walmart has made that move, but some of the language would indicate to me that they now have laid the groundwork for potentially doing it.
That's an interesting detail that you made, that you've raised, and a possible change in their positioning. So I appreciate that, David. Can you believe 30 minutes has already passed by?
Mark, when it's talking with you, yeah, it is. Yeah, time flies.
Let's save something for next month. And on that note, I just want to thank you again. It's great to see you. We'll be chatting again with our dear friend David in the next few weeks. All right. Bye, folks.
Take care.